Happy Friday, traders. This is Fawad Razak, other market analyst for City Index. Today is the 28th of March. So, trade war is what's driving the market right now. And as you can see, the major indices are all trading deep in the red. As you can see from the chart in front of you, the S&P 500 has found strong resistance in the last few days when it tested the 200-day moving average and prior support area around 5,770 to 5,800. That shaded gray region, which was previously support and turned into resistance. So the focus was then on whether this shaded blue area would turn into support. Well, as you can see, it hasn't today. We've broken down that support, leading to a sharp move to the downside. The next level to watch is 5,600, the low from last Friday's candle, where lots of stops would be resting, I'd imagine. So a drop below that could be the most likely outcome later today, with further support coming in at around 5,500, where we have the 61.8% Fibonacci retracement level against the August rally. So the path of least resistance remains to the downside for the S&P 500 and indeed other major US indices because of concerns about trade tariffs. And these are the key levels to watch. So in terms of resistance levels, then, well, those levels that were taken out, in particular this blue area, is now going to be the most important resistance level to watch. If we were to go back above that zone, I think that would be a bullish scenario. But for that to happen, I think we'd need to see a positive development insofar as the trade war is concerned. Similar to the S&P 500, the Nasdaq has also taken a hit, with technology companies leading the declines. The Nasdaq is now back below the trend line that it broke down a few days ago or a few weeks ago. That trend line had been in place since January of 2023. So the path of least resistance is clearly to the downside on this market as well. And for me to turn bullish on the Nasdaq once again, we need to see this trend line being reclaimed, or we see a bullish reversal pattern at lower levels first. So, for example, one potential bullish scenario would be if we dip below this recent low and we quickly reject that low and form a hammer-like candle either today or early next week. So if that were to happen, I think that would be a positive sign, but we have to see it now because, as I said, the trend is clearly bearish in the short-term outlook. In Europe, we've seen car makers come under intense pressure in the last few days because of the latest tariffs, and the DAX has broken down. It has taken out this area of support between 22,700 to 22,740-ish, the shaded gray area, where we have the 21-day exponential moving average also converging there. We have broken below that zone. So it looks like the DAX is potentially hitting lower. And from here, the next downside targets include, for example, the 22,300 level. And then thereafter, you have this high from end of January coming in at 21,800. With equity markets falling, you can see that gold is continuing to move higher, hitting fresh record highs. Today's high so far is at 3,086 or thereabouts. And the key question is, can this bullish momentum continue? Well, so far there's no signs of a reversal, but the 3,000 level has been a key target, and we're obviously well above that level now. So gold remains in a strong bullish trend, and for me to turn bearish on gold, we'll need to see a key reversal pattern emerge in one of these days. One factor that could weigh on gold is if equity market selling continues, forcing investors to liquidate their profitable long positions on gold in order to free up margin. That could potentially be a scenario where we could see gold go down alongside equity markets. I remember that happened initially during the COVID sell-off in March of 2020, when gold initially sold off before bottoming with equity markets and then taking off from there. So there is a risk that gold could potentially fall if the equity market sell-off continues and gathers pace. For more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. Have a great weekend.